All right, let's take a look at how to do a bank reconciliation. We have some problem data here. It says the August 31st bank statement of Watson Healthcare has just arrived from United Bank. To prepare the bank reconciliation, you gather the following data, and it gives us really letters A through I here. Let's take a look at letters A and I first. It says here the August 31st bank statement balance is $56.30, and then in letter I it says Watson's cash account shows a balance of $3,100 on August 31st. Okay, so here's our bank reconciliation. I've already put the heading in there for Watson Healthcare, the bank reconciliation, and our specific day that we're doing this on. All right, so let's take a look and see how this works. We know, let's take a look at the easiest ones first. Bank, we said that in letter A, the balance per bank was $56.30, so we'll put that here. And then we know that in letter I, it says the cash account balance, or in this case, the balance per books is $3,100. Okay, so we'll just go through now the rest of these, and then we'll have to figure out how we're going to put them into this particular form here. All right, let's get this up. That's what's going on there. There we are. And I would say there's really no reason to have in this problem dollars and cents. Probably in real life examples you would have that, but just for ease of readability, we'll just go ahead here and make it so that there's no cents on this. Okay, so let's see what we got in letter B. It says the bank statement includes two charges for NSF, or non-sufficient funds checks from customers. One is for $390, that's number one, and the other is for $140, that's number two. So again, the bank knows about this, it's on the bank statement, but we don't know, or Watson doesn't know about it, so we have to put it on the book side. So because they bounced the checks, we'd have to subtract them, so we'll put NSF checks here. And we have number one, which was for $390. And we have number two, and that was for, just to confirm the number again, $140. Again, just so you're aware, these columns have nothing to do with debits or credits. We're just using these as math computational columns here to help us with our calculations. Okay, let's go back up to letter C here. It tells us the following Watson checks are outstanding at August 31st. Remember, Watson is aware of them. The bank is not. So because the bank is not aware of these checks that are outstanding, we have to subtract them from the bank side. So we'll come down here and we'll have outstanding checks. And we'll just list them accordingly here. We'll list them all. So we have 237, and we have 288, then we have 291, 94, 95, 96. 291, 294, 295, and 296. Okay, so those are the check numbers. Let's go ahead and put the actual amounts in here. So we have 9160. Then we have 550, 620. Then we have 10 and 100. 10 and 100. Okay, so we've got that squared away. Let's see if they what they do in letter D here. Watson collects from a few customers by EFT, or electronic funds transfer. The August bank statement lists a $1,700 electronic funds transfer deposit for a collection on account. Okay, so in this particular case, we've gotten money that we weren't aware of until we got the bank statement, in this case Watson. So we have to add that to our book side. EFT receipt. If I could spell, there we go, on account. And we would add that in the amount of $1,700. Okay, then we also go to E here. It looks like it says the bank statement includes 2 special deposits that Watson hasn't recorded yet, $850 for dividend revenue and $60 for interest revenue Watson earned on its bank balance during August. Okay, again, these are on the bank statement, so the bank knows about them. Watson does not, so it must be added on the book side. So we have dividend revenue, and that was for $850. And we have interest revenue. And that was for $60. So that takes care of letter E. Then we go to F. The bank statement lists a $70 subtraction for the bank service charge. Again, the bank statement is aware of it. It's on there, so we must subtract it from the book side. Bank service charge. And that was for $70. Okay, that takes care of F. Then we go to G. It says on August 31st, the Watson treasurer deposited $310, but this deposit does not appear on the bank statement. So again, in this case, Watson is aware of it, but the bank is not. The deposit has not made it onto the bank statement, and therefore is a deposit in transit that must be added on the bank side. Add deposit in transit, and that was for $310. Okay, then we get to letter H, which is actually our last one since we've already taken care of I. It says here the bank statement includes a $700 deduction for a check drawn by multi-state freight company. Watson notified the bank of this bank error. Okay, so in this case, the bank took money out of Watson's account when they should not have, so therefore the bank must replace it by adding it back in. So we have bank error, and that was for $700. Oops. Okay, so I think we've gotten through everything. Let's just do a double check. We took care of the bank balance, we took care of the 2 NSF checks, the outstanding checks, the EFT receipt on account, the 2 special deposits, the bank service charge, the deposit in transit, the bank error, and then the balance per books. Okay, so let's take a look now. We can kind of come down here and let's make this a little bit more easy to see. Let's make this 85% here to help us. There we go. So now we can see everything in one screen here. All right, so let's add this stuff up here. Let's just make this a total. Obviously 310. Let's escape that. Let's do this. Come there. There we go. The 310 plus the 700 is 1,010. And let's add this up to the beginning balance per bank to get a subtotal here. So we would take the 5630, we would add the 1010, and so right now we're at 6640 on the bank side. Now we need to add up all the outstanding checks, so let's do that. Let's take this here and just go 90 plus 160 plus 550 plus 620 plus 10 plus 100, and we see that it's 1530. So now we can go ahead and do this. We can take the 6630, subtract out the 1530, and our adjusted bank balance comes out to be 5110. Okay, so let's see how this other plays out over here. We have a total here of 1,700 plus the 850 plus the 60. That would yield to us total additions for the book side of 2610. We take the 3,100 plus the 2610, and our subtotal for the book side is 5710. All right, let's add up the subtractions. We have 390, we have the 140, and we have the 70 here. Okay, so we end up with 600. Okay, so then we simply take the 5710 minus the $600, and notice that we get the same 5110 balance for the adjusted book side, and notice that they equal in both cases, where the adjusted bank balance equals the adjusted book balance. So it looks like we're in agreement here. So let's pause here, and then I'll come back to you in a few moments, and we'll do the journal entries. Remember, we only have to do the journal entries for the book side, in this case for Watson. Okay, let's look at the journal entries for this now. And I created a tab down here to kind of help us with this for the journal entries. Okay, so remember, we only have to do the book side, so the only thing we have to worry about is this. And really the things that have come in, we are going to add. And then obviously if we paid out cash or we had some other issue with cash, we'd have to subtract. Okay, so let's do this first. So the first one will be for where cash is having to increase. So we'll debit cash. And we know that that total amount is for the 2610. So we'll put that in there. And then we need to figure out what we're going to credit. All right, so an EFT, receipt on account, means that a person, a customer, has reduced what they owe us. So we're going to credit accounts receivable in this case for that amount. And then we know the other two accounts would be specific account revenue accounts. We know we had dividend revenue account that we would credit. That's a revenue account with a credit balance, and we're increasing it. And then interest revenue would also be its own account as well. So those three things there would be credited. Let's get the amounts. So we have 1,700, 850, and 60. 1,700, 850, and 60. Okay. Now, just beware, in my accounting lab, they may want you to do these separate and not as a compound entry. So they may want you to debit cash for 1,700, credit accounts receivable for 1,700. Then debit cash for 850, and then credit dividend revenue for 850, so forth and so on. Just kind of keep that in mind. Then we do the other required entry. We know that we're going to have to credit cash for a total of 600, but what are we going to have to debit? Okay, so let's look and see what we have here. If a customer or customers bounce checks to us, that causes a problem, because let's think, they have the good or service that we provided to them already, and we thought they paid us, but they really didn't. So in essence, they owe us the money, and we have to put it on as an account receivable. So we'll just debit accounts receivable for the total amount. Okay, so we have accounts receivable here. And then we are also going to have to debit some type of expense account. You could use service charge expense, service expense, bank service charge expense, however you so choose. So we'll just do bank service charge expense. All right, let's get our amounts. We know we had 390 and 140 for accounts receivable, plus 390 plus 140. And we know that the service charge expense was $70. So we get 70 here. And again, we're going to have to, in this case, credit cash in the amount of 600, the 530 plus the 70. So again, your MyLab may say that you do them separately. You would debit accounts receivable 530, credit cash for 530, debit bank service charge expense 70, credit cash for 70. It's all still the same thing. Here I just combined them into two compound entries instead of doing a whole bunch of different ones. In essence, it'll save you some time if you do the compound entries because you won't have so many things to post to your Cash T account. Okay, that concludes this video on how to do a bank rec and the journal entries required. Let's move on to the next topic.